US trade deficit surges as imports spike, raising questions over tariff strategy. The United States recorded a sharp and unexpected widening of its trade deficit in December, underscoring persistent structural imbalances in the world's largest economy despite an aggressive tariff campaign by President Donald Trump. According to the newly released data from the Commerce Department, the monthly trade gap ballooned 32.6% to $70.3 million, far exceeding economists' expectation of a contraction, while the overall deficit for 2025 narrowed marginally to $901.5 billion. The goods trade deficit climbed to a record $1.24 trillion, highlighting the enduring pressure on US manufacturing competitiveness. The figures cast fresh doubt on the effectiveness of the Trump administration's sweeping tariff, which were designed to rebalance trade flows and revive domestic industry. Instead of a manufacturing renaissance, factory employment has declined by 83,000 jobs between January 2025 and January 2026, suggesting the policy has yet to deliver its promised industrial rebound. Economists note that global supply chain realities and strong domestic demand continue to drive import dependence, blunting the intended impact of punitive duties on the export side. The picture was more subdued. Overall exports fell 1.7% in December to $287.3 billion, with goods export dropping 2.9% due largely to reduced shipments of industrial material. There were, however, pockets of resilience. Capital goods exports, particularly semiconductors, posted gains, and consumer goods exports, including pharmaceuticals, also improved. For 2025 as a whole, good exports increased 5.7% to $2.20 trillion, partially cushioning the widening goods deficit. Meanwhile, the services sector remained a relative bright spot. Services export rose modestly to $106.5 billion, continuing to offset some of the goods imbalance. The larger than expected deficit is likely to weigh on fourth quarter economic calculation. Many economists now warn that the trade could subtract from GDP growth when official figures are released. A Reuters survey suggests the US economy likely expanded at an annualized 3.0% pace in the fourth quarter, slowing from 4.4% growth in the previous quarter. The latest data underscores a central dilemma confronting Washington. Despite tariffs and trade pressure, the US economy remains deeply integrated into global supply chains and heavily reliant on imports, particularly in high-tech and industrial sector. As the Trump administration continues to prioritize economic nationalism, the widening goods deficit may intensify debate over whether tariff-led trade policy can realistically deliver the structural rebalancing policymakers seek.